Warren Buffett once said, "It's far better to buy a wonderful company at a fair price than a fair company at a wonderful price." Expert investors look at the intrinsic value of an asset rather than the current value because this applies to the current value of Bitcoin, which has soared to over $70,000. With the crypto space presenting unique opportunities and challenges, navigating it can be daunting. But fear not. By adhering to these fundamental principles, you can elevate your crypto investment strategy to new heights. Let's dive into the key takeaways from our guide before we delve into each rule. First and foremost, investing in crypto follows many of the same rules as traditional markets. Understanding this is crucial for building a solid foundation. Rule 1. Invest only what you can afford to lose. The golden rule of crypto investing. Never invest more than you can afford to lose. With extreme volatility, it's essential to protect your capital at all costs. Before investing in cryptocurrency, you should, at the very least, have enough money saved for emergencies. When the time comes to invest, no more than 5% of your wealth should go into it. This is sufficient to reduce the effect of losses on the portfolio as a whole and increase exposure to possible gains. Rule 2. Research and stick to the fundamentals. Research is key when it comes to crypto investing. Focus on projects with strong fundamentals, real-world adoption potential, and a competent team behind them. The use of the token, transaction speed and scalability, network security, the coding language or languages utilized, team transparency, and the token's advantages over rival cryptocurrencies are all essential research foundations. Rule 3. Use dollar-cost averaging. Dollar-cost averaging is your friend in the world of crypto. By making small, recurring purchases on a set schedule, you can mitigate the impact of volatility and build your position over time. By using dollar-cost averaging, you can gradually develop a position without getting caught up in the mentality of trying to time market tops and bottoms precisely. As a result, we'll lessen the impact of volatility by purchasing comparatively more cryptocurrency when prices decline and less when they increase. Rule 4. Stick to the major cryptocurrencies. While smaller coins may seem enticing, sticking to major cryptocurrencies like Bitcoin and Ethereum can offer stability and long-term growth potential. Larger cryptocurrencies, as opposed to more recent or smaller cap coins, have typically shown their durability, even though risks still exist. If the opportunity presents itself, though, think about shifting the focus from huge asset profit-taking into more promising, recent ventures that have practical applications. Relative to the size of your whole investment portfolio and your risk tolerance, try not to significantly overweight big cryptocurrencies, just as you would with any other asset or security. Rule 5. Employ common sense. When it comes to crypto investing, common sense prevails. Avoid falling for hype or speculative assets. Ensure that your portfolio is well balanced across several asset classes. Avoid overexposure to cryptocurrencies. Make sure any cryptocurrency information is accurate before acting upon it. Recognize that investing in cryptocurrencies is still quite speculative, and be prepared to reduce your losses should the market conditions alter. For advice specific to your financial circumstances and objectives, think about speaking with fee-only financial advisors. Rule 6. Use safe storage. Keeping your crypto safe is paramount. Utilize hardware wallets or trusted custodial services to safeguard your investments from theft or hacking. Store your recovery phrase in a secure location, such as a bank vault or locked room. Passwords. Your recovery phrase should not be kept electronically. If it is, encrypt or password protect it. When entering sensitive wallet info on devices, exercise caution. Create strong, one-of-a-kind passwords. Rule 7. Learn and understand the technology. Understanding the technology behind crypto assets is essential for informed investing. Take the time to learn about blockchain, consensus mechanisms, and smart contracts. Gaining a rudimentary understanding of cryptography also enables you to appreciate the possibilities of products such as zero-knowledge proofs. Keep yourself informed about new technological advancements in the field by subscribing to reputable industry magazines and blogs, regardless of the cryptocurrency you buy in. Rule 8. Pay attention to the courts and regulations. Legal and regulatory developments can have a significant impact on crypto markets. Stay informed and adapt your strategy accordingly. For instance, several miners relocated their operations when China outlawed cryptocurrency mining. Keep abreast of any governance modifications implemented by blockchain initiatives. These have the potential to significantly change staking returns, development finance, and other processes. Rule 9. Use crypto indicators to inform decision-making. Technical indicators can provide valuable insights into market trends and price movements. Incorporate them into your decision-making process for more informed trades. It's also crucial to pay attention to new, crypto-specific metrics like addresses by time held, average transaction fees, mempool size, and on-chain activity. You can better time your inputs and exits by evaluating indicators. For a fuller picture, integrate blockchain-based and technical analysis. Always keep an eye on the big picture rather than responding to short-term fluctuations in pricing. Rule 10. Stay disciplined. Finally, stay disciplined in your approach to crypto investing. Stick to your strategy, continually refine your tactics, and remain focused on your long-term goals. And there you have it, our 10 rules for success in crypto investing. By following these principles and staying disciplined, you can navigate the complexities of the crypto market with confidence. Don't forget to like, share, and subscribe for more insightful guides on crypto investing. Until next time, happy investing.